Let's bring in Kevin Green. Let's talk about the big picture after all-time highs yesterday. Not exactly the best start here to the session, KG. What do you kind of take into account when the record comes on like a last-minute squeezed into the bell that we got yesterday?
Well, yeah, I think yesterday what we saw from an equity standpoint was actually a little bit lower volume. Now, when you're looking at the options, as we kind of talked about, we actually did see aggressive, volume both to the upside and downside yesterday. But from the equity standpoint, I think you had a very low volume environment going into the close, an aggressive market on close order on the buy side there, which really kind of rallied the stocks higher here. And so if we're kind of looking at it, 6130, we've had it on the radar. It's going to act as an area of resistance. Maybe today we try to break out above it, but we did make all-time highs here. What I have done for this chart here, we got a couple of things going on here, but 6130, that's kind of your flat line. That's what we tested yesterday for the most part, right? A couple of points to the difference from that all-time high. But what we did is actually have that area, obviously that flat area of resistance. If you kind of take the lows, the wick lows, basically since back from January 13th, you kind of have this situation where you're coming into another, triangle formation, or you can call it a wedge, but it's more of a triangle formation where we're making higher lows. And then let's say that we're making, for the most part, equal highs to the upside. So this is kind of, once again, another setup or scenario that's in place here to try to see if we're going to break higher. And if we break higher, it might be a little bit of an aggressive break going up to the 6150 area. And if we can continue to kind of see this rolling up and rolling out of call activity, which we have seen over the last couple of trading sessions here, I think you go and look at the 6175 level. I believe that once we get to 6175, just because of the nature of that structure that's there on the call side, even though it's a little bit farther out, I think it probably will be a little bit more of a battle. And any type of breakdown, once again, the 20-period moving average, also kind of looking at that confluence of support there, sitting at around 60.70 for the 20-period moving average. Now, on an intraday basis, here's where I'm looking at 6130 going to be your first area. Obviously, that's kind of near new all-time highs. So that could be an area of resistance that aligns with that longer-term chart. Any type of breakdown holding 6100 is going to be very key. Any type of breakout to the upside, 6150, 6160. I mean, you're already seeing some of those flows here. What you are seeing is calls being rolled up and rolled out, though. That's actually very bullish for the market. And you're also seeing puts being rolled up as well, getting a little bit more closer to, let's say, at the money. So for this morning, 6100 is really commanding the space when it comes to the put side of the equation. Usually when we see that type of action, we have the stair-step move to the upside. And that stair-step move also kind of coincides with a little bit of compression. It doesn't mean that we can't advance, but it does mean that we're going to just have these, 1%, 1.5% days to the upside. That just doesn't seem like the positioning right now, but the positioning is bullish for right now.
Nice. And the hedged equity JP Morgan fund that you watch, just to come back to that and the level there, what's the role of that again in terms of that? Is that just like if it goes past that level, then you add a little bit of extra kind of nitrous to the rally? Because that means that they're like surprised and they've got a chase, or what?
No, so JP Morgan doesn't make any active changes when it comes to their collar strategies. But if you do get an aggressive break above 6175, you could see a melt up in the market. I mean, it's all of these individuals that are looking at flows, obviously we're all kind of keeping our eye out on that level. So any aggressive break above that probably would coincide with aggressive call buying activity. And then that's when we kind of rip to the upside.
So it's not really that like they would be having to adjust to do something, the fund. It more is just if you're able to get through that, that means something is already powerful happening.
Exactly. Yeah. Okay. And actually, the closer and closer we get to expiration and the more that gets closer to at the money, the more power that it has, right? The farther out of the money a particular level has, where you have a significant amount of positioning, the less, power theoretically that it actually has on impacting the markets when it comes to resistance or support levels. But the closer and closer you get to expiration and at the money, those gamma exposure levels get a little bit more elevated. Also, we talk about charm every once in a while. You'll hear Jim Carson talk about that. That's basically just time value risk that's in the market. So as we get closer and closer to expiration, that's also something that can accelerate buying, or any type of aggressive snap to the downside can also accelerate. So once again, an area to keep in mind. Everybody's got their eye on it.
And when's their expiry? Those calls. That's
going to be the end of quarter. Of quarter, so March 31st. So it's not going to be the March quarterly expiration that we're looking at triple witching or quadruple witching. It's going to be the end of quarter expiration that we have there. And then today, Oliver, just one thing to kind of note, and I did actually highlight this on the chart. I try to do it as best as I possibly can, but we do have VIX expiration, or the VIX expiration actually already did occur at the open this morning. So What could we also see today that might, I would say, frighten individuals that look at options flows, but something that they have to keep in mind is that usually when we have these VIX expirations, you see the VIX rising, and then you also see VVIX rising, right? You're going to get a new positioning, taking place here from a lot of institutions. The aggressive buying and activity that you have in the VIX options itself is actually going to drive up VVIX, which is the volatility, vol, if you will, right? So that's not outside of the realm of possibility. If you kind of look at it last year, I think we only had 3 occurrences out of 12 that I have out on that screen where we actually see VVIX or volatility actually crush after this event. So it's nothing that's out of the norm for us to see volatility get a little bit heightened here over the next 24 to 48 hours. That's actually a more of a mechanical item in the market rather than something that's creates fear or something that the market's kind of concerned about, aggressive pullbacks or anything of that nature. Now, something could align with that, but traditionally, if we kind of take the news flow out of it, it's normal for us to see higher vol today and tomorrow.
Okay, noted. Love it. Thanks a lot, KG. Appreciate the look at the options flows and the technical.